I just like the multifamily one because you can do the FHA and get more bang for your buck. So we were able to buy, essentially 4 rentals at one time doing that FHA.
Welcome back to the Prospecting Show, where each week we talk about tips, tricks, and methods for growing an amazing small business pipeline. I'm your host, Dr. Connor Robertson, and on this podcast, you can expect segments on communication, sales, prospecting, and closing. Thank you to everyone who has supported my 100 episodes and the 100 days goal going into 2020. Enjoy the show. I appreciate you guys spending the time to kind of tell me a little bit about what you do. I know Keith was telling me a little bit more about what you guys do together, but maybe it would be kind of cool to hear from the horse's mouth what it is you guys are doing, at least on the rental side, and that way I can have a better understanding.
Yeah, definitely. I remember talking to Keith a little bit about it the other week in Pittsburgh, and he seemed intrigued. He's like, all right, you guys seem to have the good idea, the whole rental income pay for itself kind of thing. It's something we really just got into last year. I would like to say I can speak to it a little bit easier, but Travis knows a lot more about it than I do. He kind of tailed me into it. So probably best if he gives you like the broader overview of it.
Yeah, let's hear it.
So I was lucky, and my parents had rentals the whole time I was growing up. So just grew up with the mowing the grass and fixing little stuff here and there. And Abbie's family still has rent houses to this day as well. So it was nice that we both had some experience with it. And then something I've always been interested in, but I traveled around a lot for work up until a year and a half ago or so. And I would literally move like every 3 to 6 months. So just didn't want to be like a long distance landlord, and never quite worked out. But then decided to move back home and kind of partner up with my dad in his insurance office about a year and a half ago or so now. And just had been listening to a bunch of Bigger Pockets and diving into a bunch of financial independence stuff. And everything I was reading and hearing was like, if you can do a good house hack, that's like the number one thing to get you on the right path. So that was like my main goal when I got back home, was just to find like a duplex, triplex, or quadplex to move into one of the units and then rent out the rest. And house hack, if you're not familiar with it or other people, it's essentially just having your renters pay all your expenses and you essentially live for free. So on a fourplex, it typically works the best. But even on a duplex that I originally bought, me living in half and renting out the other half covered pretty much all of my expenses, and mainly talking about the mortgage, taxes, and insurance. And instead of that costing me like $700 to $1,000 a month, it was like probably $100 or $200 a month that I had to come up with. And then I was only looking to buy a duplex, and then I'm from a town of 3,000 people, so there's not that many options, and wanted something in my hometown. And a family friend of my dad's had 3 duplexes that he wanted to sell, and it was kind of an all or nothing type deal. And I kept telling him I only wanted one, and he wouldn't do it. And he just kept dropping the price, and eventually got to a point where I really wanted them, and found a small town bank around here that did some fancy finance work that probably got us into the crash in 2008, but somehow they're still doing it now, and let me put down essentially no money down loan on 3 duplexes all at once.
Wow.
It, knock on wood, it's worked out great so far. Inherited 6 renters at the time. One of them left a month or 2 after I bought them, and then I moved into that unit, and still in there now. And then back in September, Abbie and I found a 4-unit property over in St. Louis, and we really like the city. And right now my place is about an hour outside the city.
Okay.
And so she's lived in the city for 8 or 10 years, and we just really like being in the city. But I didn't want to drive an hour each way to work, so we kind of wanted to try to find something that kind of fit all of that. And we found a 4-plex in Soulard, which is the prime area of St. Louis, where Abbie's lived for 8 or 10 years now. and just a great property. 2 of the units are 2-bedroom, 1-bath, and the other 2 units are 1-bedroom, 1-bath. And same deal, we took one of the 2-bedroom, 1-bath units, and the other 3 units there more than cover the mortgage, taxes, and insurance, even with us not putting a dime towards it. So we kind of have our city apartment and our country place is how we look at it, and neither one of them are really costing us any money.
Wow.
And then actually I started Airbnb in my place in my little
Okay.
home, not thinking much would really come of it. But we do have a really big lake in my town that does get some tourist traffic in that. And it ended up renting out like every weekend on Airbnb
Wow.
this
Crazy.
past summer. So that was some nice extra income that we weren't expecting. And we're going to try to do the same thing in St. Louis, and just the weekends that we're in St. Louis, we'll rent out the place in my hometown. The weekends we're in my hometown, we'll rent out St. Louis, and vice versa. So we're just really trying to maximize the housing game and make it be an asset instead of a liability for us.
Yeah, it sounds like you guys have really figured that out. So let's talk about the OPM that you guys did. You got zero down financing on a triplex. Is that what you said you got there?
So it's actually 3 separate duplexes.
Three
So
duplexes, okay. And one mortgage or multiple mortgages?
all one mortgage, all from a
Wow.
small town bank here in my hometown. And basically, my dad had to co-sign with
Sure.
me and put up a little collateral, but didn't have to put any money down on it. And just kind of one of those down home deals, I guess, is the best way.
It's good growing up playing basketball with the banker's son, in other words.
Yeah. No, well, that's the thing, though, is the small banks seem to do really well, because if you go to a large institution like Chase or one of those big banks out there, what they're going to do is they're going to look at the collateralization of it plus the risk table and pretty much just decide off of that, right? They're not going to look at the people and the relationship and the utility of the product. They're just looking at, oh, this person's, has no net worth and they want to put no money down, and they just look at it in a bad way. So I think the way you guys did it definitely makes sense. Now, what's an average, mortgage? 30 years? Is that what you guys took out on it? Like, are you building equity in the home right now, or are you just trying to cash flow it still?
So I originally locked in a loan for 10 years.
Okay.
With stretched out 30-year amortization, but fixed rate for 10 years, and got it at 4.5 with no money down, which I was pretty happy with.
That's amazing.
And then that's the one. So the 3 duplexes in my hometown, we're trying to just throw as much money at those as we can right now and get those paid off here within the next 5 years.
Okay.
And that would give us enough money, probably $2,000 to $3,000 a month, where just kind of like our breathe easy money. If one of us, wants to change jobs or go do something more of a passion project or something like that, it's enough money where we can at least like survive okay off of, with having no housing expenses, no car expense, that type of stuff. So that's our plan, is just to funnel, we're still doing our 401ks, our Roth, all that kind of stuff, but everything kind of on top of those, we're just planning on putting towards the properties for the next 5 years, getting those 3 paid off. And then who knows? I mean, I'm sure the plan will change within the next 5 years. But that's the plan as of now. And then for all other kind of entry level investors and people that want to just get started, an FHA loan is in my opinion by far the best thing for somebody looking to get started.
And why is that? Because of the qualification criteria or the percentage, or what just for people who don't know what an FHA is, explain that.
FHA is a federal housing authority loan, and it's essentially government backed or government protected or something of that sort. And you can buy up to a 4-family unit using this type of loan, and you only have to put 3.5% down. Now,
Gotcha.
I was able to use, this hometown banker, got a good loan, worked out okay, but even them, they wouldn't do that type of loan down in St. Louis. So this FHA loan, we still only had to put 3.5% down, and it's a fixed rate for 30 years, and the interest right now are around 3.25%, 3.5%. So, not not that it's nothing, but I mean, our parents grew up in the 15-20% interest rate days, and
Right.
so to be able to lock in a loan for 3.5%, 4%, 5%, even, like, that to me is just crazy. So yeah, for anybody looking to get into it, I mean, to only have to put 3.5% down, I mean, in my area, you can buy a duplex for $100,000 or less. So to be able
Wow,
to take
really?
less than $5,000 and put that towards a rental property and essentially have zero housing costs, to me, that's the best investment
Eh,
anybody can make.
Yeah, absolutely. And what would you say about the risk tolerance with going from, a duplex to a triplex to a quadplex, or, something bigger? Do you ever worry about the renters not necessarily paying or leaving or whatever it is that kind of changes your cash flow position for that month or future months? Do you ever worry about that?
Yeah, definitely. I mean, I've been very fortunate so far that none of the original renters that I got have moved out so far. I mean, we're only talking a year, but it's been a year.
Sure.
And, everybody's stayed so far. I've got fantastic renters, so it's worked out great so far. But in my hometown, there's a lack of rental properties available. So I don't even, like, I've never had my places for rent. I don't really tell that many people about them, and I still get at least one phone call a month from
Wow.
looking for a place to rent, and rent just keeps going up and up and up in my area. So I mean, yeah, I'm gonna have a month probably where, like, I'm gonna have to fix some stuff up, rehab and that, but I'm not really worried about finding somebody in a good amount of time. And same thing with St. Louis. We had to fill one unit when we bought our fourplex over in St. Louis, and we actually filled that from a friend of a friend before we even bought closing on the property. And so I mean, we have, I would say, like, upper middle, not upper middle class places, I would say, where they're not, but they're definitely not the worst. So we're kind of in that, what I think is the sweet spot, where we still are able to charge decent rent, but it's not the highest, not the lowest.
It's not going to crash on us.
Yeah, and rental prices go down and that type of stuff. I feel like our places are in that nice middle ground where we're not trying to get peak rent or anything like that, and we've got some wiggle room in them. So
Sure. And what would you say for people who maybe don't want to go full for a duplex or a triplex? Like, let's talk single family home. Would you recommend that to people, or you think that's too much risk because it's one renter, and if they're gone, they're gone. Plus the FHA loan is going to be a little different, meaning you haven't really extended it to its full capacity.
I mean, everybody's kind of got their niche and their opinion, and I mean, there's guys that'll argue till they're blue in their face that single family's better than multifamily, and some guys say, you got to get up into 10, 12 unit apartment complexes and this, that, and the other. So I mean, there's guys that have made fortunes doing it a house at a time, and there's guys that save up a ton of money and buy a 10 unit apartment complex as their first deal.
Right. Right.
So I
Something
think it's
huge.
just kind of personal preference and what somebody's been exposed to in that. Um, I don't know, that the house at a time. I just like the multifamily one because you can do the FHA and get more bang for your buck. So we were able to buy, essentially 4 rentals at one time doing that FHA. Where if you're doing the single family, you can only do one FHA at a time, really, or you can only even hold one FHA loan at a time. So if you bought a house FHA, for one thing, you got to live there for a year before you can rent it out. That's one of the stipulations of
Right.
FHA. So you got to live there for a year, then you could rent it out. And if you wanted to do another FHA loan, then you have to refinance the place that you're in now, get it to be not FHA, and it's just, more of a process. I'm not saying you can't do it and you can't make money, but I don't know. For us right now, the apartments were just kind of easier to get a few of them quickly.
Sure.
And
It's a good quick out of the gate, right? Because a lot of people are probably looking at it and saying either, oh, well, one family, single family home is easy for them to get, but then you don't get the FHA. So you got to put 5% down or something to that nature. Or you got to go for the multifamily, the large multifamily, like a 10-unit apartment complex, which, like you said, requires a crap load of money up front, or else you really can't put any money down. And I'm assuming you can't qualify an FHA beyond that 4 units. Is that what you were saying before?
Yeah, that's correct. So it's got to be 4 units or less, and all in the same building. So it couldn't even be like two, how sometimes there'll be like 2 duplexes right next to each other, or even kind of sharing a lot in that. And from the way I understand it, it's got to all be one building.
Sure.
To be able to qualify for the FHA like that.
Gotcha. Now, what's your guys' goal? So you have all these strategies here. You got multiple units. You kind of have it all set up. You got the right loan type. But what's the ultimate goal that you have with these properties? I'm assuming it's not just to rent properties. You're trying to do something. What is that goal?
Honestly, the end goal for it since the beginning is really just the financial independence aspect, because we know as soon as all these properties are paid off, even just the duplexes in Illinois, if they're paid off, it gives us so much more freedom. Like if one of us decided not to work, we could do that. Having all of them paid off, both of us could not work and then some, and we'd still be able to put money away. It gives us more than enough wiggle room to live our lives and be able to pursue those passion projects like he mentioned, or travel the world and work remotely. It's just the freedom and the options to do whatever you want.
And what would you say you do differently today in preparation for this kind of long-term goal? Because there's got to be some sacrifice that you're going through now to be able to kind of look for the future. What does that look like for the people who might not understand that?
Spending a lot less money, right, Travis? Budgeting.
Budgeting. Okay. So would you say that you're probably good with money anyways, because, with your guys' age and kind of going into this space, you have to be good with money or else you could never, operate this type of business or side hustle, or whatever you want to call it. But do you think that you are more frugal than you were before, or do you find that you're just more practical and realizing like, hey, I don't need a $70,000 car?
I'd say practically frugal. I like the combination of those two.
Okay.
And I like the term, we really like the Choose FI podcast, and they like the term valuist on there.
Okay.
It's just we put thought into what we're spending money in. Like we were just talking about travel earlier, and I mean, between the two of us, we spent probably close to $10,000 on travel this past year.
Wow. Okay. So it's still spending money. You're just spending it in ways that are more quality, or you're extending that value. Basically, you're
Right.
basically taking $10,000 and making it worth 20 because you spent it in the right way, or spent it at the right time, or whatever it is to get that extra value out of it.
Right.
Exactly.
And that $10,000 was actually 10 trips plus travel awards. That didn't even include like hotels and airlines for the most part. So it's like we're still doing more than what a lot of people are doing.
Right. And what about time for people who work, right? I know you guys both have, some different kinds of jobs there, but how, for somebody who's got the standard go to work every day, 9 to 5 type of job, how would they get into something like this? Is that even practical to travel and have these house hacking techniques if they have that kind of job? Or is this more, you got to have a little more freedom to do these things up front?
I mean, obviously with more freedom comes more opportunities with anything. But I think it's just kind of a stepping stone type deal where the more money you have in the bank, or the more different sources of income, just the more freedom that comes with that. And I mean, we're by no means anywhere near having enough, cash flow or money in the bank or anything like that to quote unquote retire right now. But we've got enough assets and enough flexibility right now where we don't if one of us lost our job or something like that, we don't stress over where our next paycheck's going to come from or something like that. But yeah, we're both in sales jobs where we do have a lot of flexibility with that. And I mean, I'll go home on my lunch break and clean up my place for an Airbnb that's getting ready to check in that night. Or if a renter's pipes leaking or something like that, six of my units are within 5 minutes of my office. So I can run there at any time throughout the day for the most part and take care of an issue. And then the other 4 units are in St. Louis where we live most of the time. So we're always right next to our units. And that's, some people don't like living next to their renters, and there's perks, pros and cons, obviously with that, but at least you're right there. You can see how the properties are. it's just easy to address issues. So I think that's another great thing with doing, the quote unquote house hacking where you live in your rental, is that it's a great way to start out in rental, because I didn't know hardly anything a year ago. Obviously I'd grown up with rentals a little bit in that, but just like anything, until you do it for yourself, you don't really know. So that's why I always tell people, just start with a duplex. Like if it's something you're interested in and you just kind of want to dip your toe into it. To me, buying a duplex isn't that much different than buying a single family house.
Right. It is very similar. So maybe to switch gears a little bit here, just so that I can get your guys' input on a few other things. You did this travel hacking too, right? So what does that look like to you guys? Because that's something that I do a lot myself, and maybe there's an opportunity for people to learn a little bit about some of the travel hacking that you guys are doing, and I can definitely speak to some of the things that I do.
Yeah. Oh, I get the travel hacking portion. Well, travel is the one. The travel hacking is the one that Travis is very hard up about, as I mentioned before. I know you're kind of a travel hacking guru yourself. But a big thing, it really started from the Choose a 5 podcast last year. I know he started it more. I honestly initially started opening credit cards under Chase, or the kind of quote unquote Chase gauntlet I mentioned to you.
Yep.
Last fall. And
okay.
And so under that, we realized, because most of those rewards, you're getting 50, 60, I think 80,000 points for some business cards each time you open a card.
Right.
And you're spending between $3,000 and $5,000. And to some people that might be crazy. Obviously, if you can't spend $3,000 in 3 months, you shouldn't be doing it in the first place. But a lot of times, a lot of people can put their rent on it, or a mortgage for a few months, or, your recurring expenses like cable and gas and whatnot. So you just put everything you would spend on it, get the bonus, move on to the next one. So right now we're in the middle of doing Chase.
Yeah, for us, with having the rentals and that, we have a lot. If you just look at how much savings most Americans have and how much credit card debt they have, unfortunately, I think most Americans are spending $1,000 a month or more on their credit cards. And that's a whole different topic, as far as probably looking to cut that down anyways. But if you're regularly putting $1,000 on a month on a credit card anyways, in my opinion, there's no reason not to be doing credit card rewards. Now, if you're keeping a credit card balance, priority number one is to get that paid off and pay it off every month, because otherwise you're losing more money than you would ever gain. But if you use credit cards responsibly, I mean, like Abbie was saying, 50, 60, 70,000 points on a credit card is anywhere from $500 to $1,500 in travel rewards, in essence, that you're getting off of those points. And, we took, like Abbie said, we did 10-ish trips this past year, I think, and we didn't pay for a single one of those flights, didn't pay for most of those hotel rooms, rental cars, all that type of stuff. We did 2 international trips, a weekend trip-ish a month or so, and spent probably $3,000, $4,000, maybe $5,000 each for all of that over the course of the year, because we were able to get the flights, the housing, and all that covered, and mainly just food and booze, and excursions and that as you're bouncing around.
And what about like hotels? So did you do conventional hotels, or did you guys do like Airbnbs and some other kind of mixes as you were traveling as well?
We did a mix the whole time. Luckily with my job, I have like a corporate account with hotels, so I can stay. So I have signed up with Hyatt, Marriott, IHG. I think we also have Hilton. So I'm able to rack up points anyway through work, which is awesome. But then Chase, which is what we're going through now, has so many partners. So we're able to use those points with those hotels on top of it as well. So let's say it's been 50-50 to the most part between Airbnb and hotels.
Yeah. Once Chase partners up with Airbnb, then we'll probably be more in line with Airbnb.
Yeah.
But they're, other than just doing like a straight cash-based reward card, at least I haven't found. Maybe you know something that I don't, as far as using credit card rewards points for Airbnb. Because I like Airbnb the best for the most part. It's just, when you have these hotel points to use, it's like you might as well stay at a hotel most of the time.
Yeah. No, absolutely. That makes sense. The only thing that I've seen is more on the spending side than the actual reaping the reward side, right? You can get 5% cash back at Airbnb for a quarter of the year with some cards, right? You can kind of they'll allow online purchases or some rolling category to get 5% back. Yeah. Yeah.
Gotcha.
Compounding rewards, but to actually utilize the points from something like a Chase preferred partner to go out there and you take like a Aer Lingus flight for free, you can't do that with Airbnb. I'm not aware of any partnerships like that, which I think is what you were talking about, that you're hoping is going to exist soon.
So hopefully that partnership comes along here before too long.
One day, Connor, one day.
Yeah. So what, just to kind of to wrap it up here, what kind of cards do you guys have right now? So what's a standard everyday use for you guys? You're doing Chase Gauntlet, it sounded like.
I feel like the better question is like, what cards don't we have currently? No, I'm sure you've done more than we have, but
yeah, I mean, I think everybody should probably start with the Chase Sapphire Preferred for the most part. They used to waive the fee. Now I think it's like $95 the first year or something along there. And I think you get 60,000 points, which is around like $750, $800 somewhere in there to spend towards travel. And if you can find a way to open up business cards, that just opens up a ton of avenues for you for Chase. And we love the cards that give you the actual Chase Ultimate Rewards points, which on the personal side, I believe it's just that Chase Sapphire Preferred or Reserve.
Right.
But the Reserve has the $450 fee, which scares a lot of people away. So that's why I usually recommend the Preferred. But then on the business side, there's three other business cards that you can sign up for that have between a $50,000 and $80,000 sign up bonus.
Yeah, so there's the Inc., right? That's one of the, I think, $80,000 point or 80,000 points there, and then you got the Southwest Triad, right? You got the personal, the small business, and then the corporate for Southwest. But what's the other cards that you're talking about?
Chase Inc. Business Preferred, but then there's also the Chase Inc. Business or the Chase Inc. Cash and the Chase Business Unlimited.
Business Unlimited, gotcha.
And you get 50,000 points for the Inc. Business Unlimited and 50,000 points for the Inc. Business Cash. And then you get 80,000 points for the Chase Business Preferred card, I believe it's called.
Wow, yeah.
So, yeah. So, just in 1 year alone, each of us racked up 250,000 Chase points or something like that.
Right, which exchange at like 1.3 to 1.5 on the point, right, for the dollar system. It's you kind of is in favor, right, when you exchange it for travel.
You get a 25% bonus when you use it for travel, as long as you have either the Inc. Business Preferred or the Chase Sapphire Preferred. So, yeah, I mean, my math's terrible, but
yeah, it's worth a lot more, right? You get 100,000 points. It's really worth $1,200 or $1,300.
Exactly, yeah. So we each got over $3,000 in value just on those 4 cards, and then I also did the 2 Southwest cards to get the Southwest Companion Pass.
Oh, you did? Okay, gotcha.
Yeah, for anybody listening that does a decent amount of domestic travel, that to me is the number one travel hack that somebody should shoot for, is signing up for the new Southwest business card that they have, which gives you 70 or 80,000 points, and then another Southwest personal card, which gives you 40 or 50,000 points, depending on what you hit. And then they just upped it, so you got to hit 125,000 total points.
Yep.
But between opening up 2 of those cards, spending
the limit,
a decent amount on those over the first 3 or 4 months, you should hit that pretty quick. And the great thing with the Companion Pass is you can get it for the rest of that year and then all of the following year. And that gets you buy one, get one free flights for that entire time.
Right. Provided that the companion is on board with the primary user, I believe, right? I think that's the stipulation for the Companion Pass.
Yeah. So like I have the Companion Pass and I can change it over the course of the year. But like Abbie's my companion listed on it. So if I book a flight, I can add her to that flight at no cost. You just got to pay that $5.99 fee or whatever it is.
Right.
Taxes on it. But for essentially no cost, you can add on your companion to any flight that you're booked on.
Wow. Yeah. That's definitely the standard hack. And that's Keith does that too. He's very big into having the companion pass for his kids. So him and his wife both fly, and they both have the companion pass for the kids. So the four of them fly always together. For two for four, or 4 for 2, I guess you'd call that.
That's definitely how we would do it too.
Yeah. It makes sense, right? Because at the end of the day, like, you're like, if you're going to fly with somebody else, you might as well go for that kind of reward because it's just worth it, right? The only downside is, like you said, it's the year you get it in plus the next year. So, I mean, that's not really unlimited unless you're churning cards in a different way or doing some manufactured spend or something. I think it's tough to get a long term.
Since we don't have kids yet, it's nice that we can kind of rotate it, because at least for now, as far as I know, the Southwest card, you can get the bonus every 2 years.
Yes.
So, I hit it this year and I got it right in like January. So then we got it for that 2 years, and then Abbie will do it next year, and then she'll have it for 2 years. And then by the time hers is expired, I can pretty well sign up for mine again. So unless Southwest changes the rules, we can pretty much just rotate
all the time.
Yeah, which one of us has the companion pass.
Yeah, that's awesome. So it sounds like you guys have really figured it out. I mean, you got the rental properties, you got